Welcome back to another episode of APMEX Answers. Today we're going to cover a topic that's starting to gain some mainstream attention that has widespread global implications that will impact many industries. Gold and other precious metals are among those expected to react to changing trends. Today we're talking about China. Because in a global integrated economy, a major event in China can have widespread implications for America. And in particular, we're going to focus on how China's population decline could affect gold over the long term. Now, it's important to clarify a couple of things here. First, getting accurate information out of China is like taking candy from a baby. It's harder than it sounds. Until just a few months ago, the best data we had said that China was not going to experience a population decline for about another decade. But China's population decline has already begun, so it's not a question of if, but more like how fast. Second, we're taking the long view in this video and projecting out the most likely scenarios based on the information we have available today. If things change or new data comes to light, it could change the outlook. Events may accelerate or stall. Let's get into it. So, China is a major player in gold markets. According to the World Gold Council, China has a bit over 2,010 tons of gold held in reserve, and they added 64 tons of gold last year in 2022. This was the second largest increase of any country globally. China is also the leading player in the BRICS coalition. The BRICS countries are fighting to overturn the US dollar as the reserve currency in the world. And what do they want to replace it with? Potentially a new currency that's backed by gold. China is also the world's top gold bullion buyer. There's a strong cultural component to China's obsession with gold. According to the Smithsonian, gold is associated with power, wealth, longevity, and happiness in Chinese culture. Ancient Chinese alchemists even believed that drinking gold in the form of an elixir would help them live longer. It's one of the most valuable gifts one can give, and the Chinese government encourages its citizens to invest in gold for retirement. All this is to say that not only is China a considerable member of the global economic order, but they are also an influential purchaser of gold, as is their citizenry. And population demographics can have a large impact on a country's ability to achieve strategic goals, like building a reserve currency that's backed by gold. So, what are the numbers telling us? Well, China's population ended 2022 down almost 1 million people. They reportedly lost about 850,000 citizens, and their birth rate dropped to a record low, exacerbating the problem. Now, some astute members of our audience may point out that many developed nations are undergoing population decline. China's not unique in that regard. But what does make China unique is the rate of their population decline, which is far greater than any other country. And this is a consequence of the one-child policy, where the government imposed a restriction on its citizens to have no more than one child per family. There are some serious implications for an aging China and ramifications for the gold market. As long as China remains economically strong, they can continue to buy gold and pursue long-term strategic objectives globally. And the dominant narrative here has been that there's a rising China. But with acknowledgement that China's demographics are starting to shift, most analysts are revising their GDP estimates down to 3% by 2030 and then further dropping by 2040. And even those estimates are starting to appear rosy because they're not taking into account the most likely scenarios of population decline. China's current population is a bit over 1.4 billion people. The newest projections from the UN say that China will lose 100 to 200 million people by 2050. To put that into context, just imagine if about half of America sank into the ocean. And by 2100, estimates from Pew Research say their population will likely be cut in half. In an extreme scenario, China will have lost almost 1 billion people from their population. So, let's talk about how this impacts the long-term prospectus for gold. China, as a buyer of gold, obviously they won't have the same financial ability to purchase large quantities of physical gold. They may even decide to sell some of their holdings to fund projects, pensions, or reforms to handle the shift in the population. Now, if they do succeed in replacing the dollar with a new gold-backed reserved currency, this is probably less of a concern. You'll want to see our video on de-dollarization if you want to learn more about that topic in particular. However, there is a more important consideration, which is that exports from China will become more expensive. When there are less people to do the work, people tend to be paid more. Overhead increases, and the price of goods and services produced goes up. So if the exports are more expensive, that can drive inflation with their largest trading partners. As Time magazine reported last January, China's labor force engaged in manufacturing is starting to shrink, meaning higher manufacturing costs in China will lead to high prices and high inflation in the US and EU. And gold does tend to respond to inflationary pressures over time. As China's demographics change, systems designed to be sustained with population growth will begin to crack and fail without meaningful reform. Chinese pensions are an obvious example, but there are other intertwined systems. What happens when the population declines and housing is no longer needed? Housing that Chinese developers spent billions building on debt. They're still paying that back, but the price of real estate will decline because of a supply and demand imbalance. So, what happens when the value of an asset drops and the developers aren't able to pay back what they owe to banks? Well, we saw what happened with Evergrande in 2021, where they nearly defaulted on $300 billion of debt. Evergrande is a Chinese real estate developer, for those of you who may not remember. The whipsaw effect of that impacted US stocks and global markets. The Fed's statement at the time was, financial stresses in China could strain global financial markets through a deterioration of risk sentiment, pose risks to global economic growth, and affect the United States. Well, the strain on global financial markets sounds remarkably similar to recent events surrounding bank runs in the US this past March. And gold has been enjoying a nice rally ever since, with historic levels of demand. In summary, there are some long-term trends that can emerge from China's population decline. China may become a less influential buyer of the yellow metal and may sell some of those holdings to cover the cost of reform. However, projected inflation increases and higher systemic risk caused by Chinese population decline suggest a long-term bullish scenario for gold. That's all we have for you today. Please remember to like, subscribe, and share with a friend. Thanks for watching, and we'll see you next time.